Rhino here, and I have another special guest. This is Scott Freitag. He is an Eastern Savings Bank representative, a lender, and a big lender in Baltimore City, a community bank, correct?
Yes, sir.
And you've been doing this for how many years?
26 years in lending in general.
26 years. So this is someone who absolutely knows what he's doing in this field. He has seen a lot of different lending practices. And what I want to do in this video is go ahead and ask Scott here the questions that us newer investors would need to know. As I've told Scott, I'm only probably in this about 2 years at this point. And there's big questions about hard money lending, private lending, and bank lending. You are a bank, so yes. What are the big things we need to know about that? The differences between them?
Right. So great question, and it always starts with this. They say without the money, there's no deal. So hard money lending they're firms. It could be one person, it could be multiple people. But they're in the business of lending money. They have a shingle outside, so to speak. They're quick, they're easy, they're readily available, especially in today's market. There's firms that are all over the country. They tend to be the most expensive source of funds, but they're also the quickest. Minimal documentation. They're typically underwriting just the deal and the asset itself. That's where hard money comes from. It's the hard asset itself. Private money, very similar, but they're typically people that are friends, family, dentists, doctors. You don't necessarily have to be friends with them, but they're individuals that are just looking for a greater return on their money than traditional sources such as bank CDs or the stock market. They're not in the day in, day out business of lending money, but it's an option for them to get greater returns on their funds. And then you have us as the bankers that kind of come in, which, we're looking at a little bit of everything, the individual, the deal, and certainly the numbers that go along with that. And the big one is credit. Most hard money lenders with the credit, they're going to pull a credit report, but they're not so much focused on what the credit score is. They'll be more interested in how's the person pay, and not just the number. We're looking at the number and how the person manages their bills.
All right, so basically the numbers are huge when working with you. That's actually huge to know. For me, I just bought a single family home, actually put it in my
Yes.
name, and one interesting thing was when I was looking to do a cash out refinance, I had asked you, maybe if you could do that, and you had mentioned that it probably might not be the best idea. You said you
Sure.
work traditionally in commercial?
We do the residential properties, 1 to 4 family, defining residential in this case. But where it kind of comes to us is, and we've done them certainly, but most of the time when they're coming to us, it's going to be in an entity name, typically an LLC. If the property is owned in your personal name, you can go to Fannie Mae, and that's where you're going to get your best kind of rates. And Fannie Mae being all the big traditional mortgage bankers that exist in any of certainly the larger national banks that have big lending platforms, you'll be limited by the number of properties that you can finance with them as an investment in your personal name. So a lot of times that's where a lot of people, the newer investors, start. Sometimes it's done purposefully, sometimes it's done unknowingly to put it in their personal name versus an LLC.
All right, so another thing that we had talked about was actually rates.
Sure.
Actually was already getting some rates from
Sure.
another mortgage broker.
Right.
And I guess I was asking you kind of, what should my rate be? And I mean, how exactly is that determined?
Right. So rates are largely determined, whether you're talking the traditional Fannie Mae lender or us here as more of a commercial bank, by your credit score, your loan to value, and the asset you're dealing with. There'll be some differences between a 1 to 4 family versus a 5+ multifamily, or a warehouse, or a big office building. So those are the primary determining factors that lenders are going to look at in determining what the rate's going to be.
All right. So for you, new investor here,
Yep.
I'm got my single family home now. Instead, I'm going to do an LLC. You did say you do here is Eastern Savings Bank.
Yep.
You guys do 1 to 4
Yep.
unit properties.
Yes.
You do single family homes.
Yep.
So what would be like the perfect deal to come to you with? What are the deals type of things you're looking for?
Sure. So, I mean, the ideal transaction for us, it could be a 1 to 4 family, it could be a 5+ multifamily, it could be a warehouse, it could be a retail strip center. But ideal, if I get to choose the customer that walks in the door, we certainly want a very high credit score. We want somebody that has good liquidity, that's cash, and it could be equity in the property if it's a refinance. We're certainly going to want to see a very good debt service coverage. And for those new people out there, debt service coverage is your net operating income relative to your principal and interest payment. And then the other big factor that we look at number-wise is global cash flow. I think that's probably better served in a video in and of itself on what global cash flow is, but a quick synopsis is, as I explain it to people, it's the commercial version of debt to income ratio, and it's the big overall picture debt service coverage, if you will, of you and your properties.
And debt service coverage ratio, like what would you say is a good one? I've heard 1.25, but I've also heard other people say larger numbers.
Sure. Well, and that's a great question. And as I tell a lot of investors, right, our minimum is going to be 1.15 that we're looking for here. And that's great. And it may work for that individual deal, but that gives you very little wiggle room as an investor should something, happen to your property. A tenant leaves, you have tenant turnover, and when you release it, maybe it's at a lesser amount. Well, you just kind of barely qualified with us at the 115. Maybe now it goes to 1.07. If you were in a situation where you needed to refinance that loan, you may not be able to qualify with us or some other bank type of lenders.
When you work with any newer investor, what is the most common thing you're usually doing? Like, is it are they bundling a bunch of deals together? Or?
Yeah. Sure, good question. So we see a little bit of everything. I'd say the most common is the refinance. We certainly do purchases. We can do the purchase with the renovation, construction, however you want to look at that, versus going to the hard money lender for that piece. That's also another big topic of conversation, maybe for another video. But I would say the most common thing we see is the refinance, and then it's a plethora of things. Sometimes the property's rented, sometimes it's not. We don't require the property be leased at the time of the refinance. The only caveat may be is if the property's not seasoned for 12 months and someone's looking to use the appraised value, say at the 6-month mark, then we're going to want to see that property's leased for that situation. That's the day in, day out deal. But we also see plenty of bundling of properties in large portfolios. Typically, we've done some here at the bank that were a large number, we call them scattered portfolios, where they were purchase transactions. More typically, they're going to be refinance transactions where someone either used cash or a line of credit of some sort to acquire the properties. Then they're looking to put some sort of longer-term debt on that portfolio. Yeah.
That was something called seasoning, which is actually something that catches a lot of newer investors
off
guard.
Yes, sir.
So when I went to refinance my first property, I had to wait 6 months because of the Fannie Freddie rules because I was using their loans. Now, you're saying 12 months. So does that mean...
Yeah, go ahead.
Does that mean if I had it financed with a hard money lender, I need to make sure that my hard money lender has to hold my loan for 12 months before I have to plan?
Right. So excellent question and somewhat a confusing topic. So I'll speak to our policies here at Eastern Savings Bank. Our standard policy is 12 months. We are considering people that have the right amount of experience, credit score, debt service coverage, liquidity at 6 months. We'll do it 3 months. However, a couple distinctions that need to be made. At 3 months, we're not going to use the appraised value. We're going to do what's referred to as loan to cost. That is your purchase price that's off the HUD-1 and documented renovations. And we'll typically lend up to 80% of that cost if, say, it's 2 or 3 months. At the 6-month mark, if you meet the criteria that we're looking for, we will use the appraised value at the 6-month mark.
Okay. Now, another thing I know that caught me a little bit off guard
Yes.
was the fact that you need cash reserves when you try to refinance or
Sure.
get another property. What is generally the type of cash reserves? And keep in mind, from my understanding, this is money that you need in your bank account before you can even refinance.
Right. Yeah. So when we think of reserves, I refer to it as post-closing. So that's if you close on a purchase or you close on a refinance, we're looking at what's left over in the accounts to run the business, because you are running a business, whether you think you are or you're not, or you think you're not. You're running a business at this point. We want to see that there's some funds there should, there could be a maintenance issue, the next day. The roof could go in 3 months. Look, your tenant could stop paying in a month or 2 months. So we want to see that there's some sort of liquidity there to kind of get through any, hardship that may occur. And while we're on the topic, the question with reserves is, well, how much do I need? And like a lot of things, it depends. Just roughly speaking, I would say we'd like to see 3 months.
All right. So 3 months for every property.
Well, yeah, it could be every property, but we're focused on like if somebody it's their first rental property, and they're doing the cash out refinance, we would like to see 3. I would recommend, we're going to want to see 3 months. That could change a little bit depending on where their credit score is. We may want to see a little bit more. So it's not a, full-blown, hard and fast rule of 3 months. It could be 6 months. We may do it as little as 2. Just depends on the circumstances.
All right, perfect. So this is actually a lot of information, definitely worth a lot of different videos to break down a lot of these subjects in depth. I guess in wrapping this one up, if you could give one last piece of advice maybe to the newer investors, you see a lot of them on the Baltimore Investor Network. I think you're on that page.
Fantastic group. If you're not a member of it, you need to be.
Absolutely. All the locals in Baltimore, all the lenders and everything.
Yes.
I mean, I'm sure you see a lot of people asking for, different lending, like maybe 100% financing or,
Yes.
I mean, does that even exist, first off?
Well, not in my world, it doesn't. It may exist in the hard money space with some caveats. And, I think it depends. Again, they're looking at the deal. If you got a really, really strong deal, I think a lot of hard money lenders would be willing to lend, all the purchase, all the renovation. Some might even, depending again on the numbers, you could roll in the closing costs. But that's always a dicey subject because on those construction loans, whether it's with us here at the bank or a hard money lender, those monies are held in escrow and they're not released until the work is completed. So the investor, you think of 100%, I don't need any money. Well, you really do, because you need to get from, to the first draw, which isn't going to occur at settlement. It could in some cases, but it's not typical.
That's another thing holding a lot of us back, because I know that I ran into that as well buying my second property. So
yeah.
All right. So any other just last quick tidbit that you can think of that a newer investor?
Yeah. So I think everybody, whether you have a property or not, or you're thinking about getting into it, and I always offer this up. You can come in, sit down with me. We can do it over the phone. We can do it over coffee. And it's like a free consultation just to kind of walk you through the steps, some different options. Of course, I'm kind of primarily focused on what we do here at the bank and how we are going to underwrite things. But I think an educated investor is going to be a better investor, and understanding, what goes into a debt service coverage. In our world, it's not just simply comparing your mortgage payment to what your rents are and whatever the difference is. It's an income or it's a loss. It's a little bit more involved in that, and understanding, just some of the other little nuances to underwriting. And I would walk you through a little bit more about the global cash flow piece. But that's what I would recommend to a lot of people, is just get educated on whether, it's going to work for you or not with us at a bank, or you're going to need to go in a different direction. I certainly refer people out that need different sorts of lending all the time.
All right, perfect. That part about calling him is huge. It's actually how I met him. I just simply saw his number on the Baltimore Investor Network, gave him a call, and he was more than happy to help me with everything. So it was actually a wealth of information.
Yep.
Definitely appreciate that.
Yep, anytime.
And guys, know Eastern Savings Bank is the bank that you work for. You
Yep.
doing this 27 years? You said?
Yeah, 26, I think.
26.
I forget. I'm getting old, man. I don't remember how many years it is.
So, huge wealth of knowledge. If you need an expert in the field, this is your guy to do it with. So, I definitely appreciate you.
No, I appreciate you reaching out to me to do this. And like I said, hopefully there's going to be some more because I think there's some other topics that we can dive into a little bit more deeper.
All right, perfect. Well, guys, if you have any more questions that you want Scott to go into, any more lending questions, and especially for you experienced investors, I know this video was more catered to the amateurs or like, I don't know, 3 or less.
Newbies is a big word, right? Yep.
Yeah, but I mean, if you guys have any questions for you, I'm sure Scott's more than welcome to answer those. And also, the number here at the bottom of the screen, go ahead and call that number. That's Scott Freitag, Eastern Savings Bank. Definitely someone you want to reach out to. I appreciate your time.
Thank you, sir.